Let's talk about something most investors avoid: prepayment penalties. At first glance, they sound like something to steer clear of. Why would you pay to exit a loan early, right? But in some situations, paying a prepayment penalty actually makes strategic sense. Here are a few examples. First, you locked in a high interest rate loan, maybe 7% or higher, and now rates have dropped. You're seeing options at 6% or even 5.5%. Sure, there's a cost to exit, but the long-term savings might far outweigh the penalty, especially if you plan to hold the asset for several more years. Second, you need cash out to find another opportunity. Let's say your current property has appreciated or stabilized. You want to unlock equity for a more profitable deal. In that case, the penalty becomes a cost of access, and if the next investment performs better, it can be more than worth it. Third, you're repositioning your portfolio. Maybe you're shifting from value add to stabilized assets or consolidating smaller deals into a larger one. Refinancing, even with a penalty, can help realign your debt with your strategy. Quick local note: in San Diego, cap rates are holding between 4.25% to 5.5% right now. A recent example: Nuveen and Pacific Housing acquired a 440-unit Class B asset in Chula Vista at a 5 cap, backed by a large debt package covering both the acquisition and renovations. In deals like that, refinancing, penalties and all, is often built into the growth plan. Bottom line, don't write off a refi just because of the penalty. Look at the numbers, compare your options. If a lower rate, more liquidity, or better alignment with your goals improves your return, it could be the right move. If you're weighing a refinance or just want a second set of eyes on your current loan, shoot me a message. I'm happy to help run the analysis.